Now, our first story today is going to be what do, institutions look for as far as the use of blockchain? And to get some insight into this, while speaking at the MIT Bitcoin Expo, experts discuss the role of big institutions in the development of blockchain technology, as well as how cryptocurrencies figure into their priority to provide value and services to their clients. Quoting directly from Ada, sure I can get this name right, Ada Kokashi, quote, "If you remove yourself from the crypto space, there are tons of events happening in finance." Now, Ada is the vice president and digital asset lead at State Street. He continues, "For example, the stock market last week just didn't behave well. And with things like 401k plans, exchange trusted funds, and mutual funds, there are tons of competition between providers, which are driving fees down. As a result," she says, "even though financial service providers have the desire to take advantage of emerging new technologies like blockchain, their focus still remains on providing the best value to their customers and protecting their existing assets and interests," saying crypto might be one way to do that, but that would involve redesigning their entire value chain, speaking of these businesses, and there's still a lot of work that needs to be done for that to become viable. She did go on to say, however, that today's clients, from State Street anyways, are becoming increasingly accustomed to the idea of blockchain, saying that institutions are in fact looking to digital assets such as Bitcoin as a way of diversifying their portfolios, whether through fund allocation or even direct investment. Now, Ria Batoria, who is director of research at Fidelity Digital Assets, speaking on the institutional panel, explained that while crypto-native startups dominated the space in earlier years, as of 2019, the trend is shifting toward institutional-focused development and investment. For instance, Harvard, Yale, and MIT all made allocations to the space indirectly through a crypto fund last year. Quote, "They are realizing that this is an asset class that cannot be ignored," said Butoria. Now, as for aspects of blockchain and digital asset technology, what aspects are most interesting to these institutional operations? Well, the concept of digitally tokenizing securities has become a major point of institutional interest in the recent years. Quote, "Investors and participants are hungry for transparency in the space, and blockchain promises more transparency," Ada said. Now, coupled with the self-executing capability of smart contracts and the promise of lower costs, the technology does become very enticing for issues of security tokens. Marrying a legacy system into the cryptocurrency ecosystem does promise a lot of efficiencies in this area. Now, Lucas Nuzzi, he's a network data product manager at Coinmetrics, concurred with Ada's assessment of interests in security tokens from institutions, describing it as a high point of interest for those institutions. Now, one example cited was the French lender Societe Generale, which issued a $112 million bond on the Ethereum blockchain in April of 2019. Further back, Daimler AG, that's the company behind Mercedes-Benz, for example, issued a 100 million euro bond back in 2017 on a private version of the Ethereum blockchain, an enterprise version of the Ethereum blockchain. And the Nuzzi stated that while traditional crypto enthusiasts may not view security tokens as a particularly exciting development, there is a lot of demand on the institutional side of things to explore this area and look at public blockchains like Ethereum as another backend for their services. Now, real estate is obviously another promising use case for tokenized securities, and by incorporating blockchain technology, this will allow potential investors to keep better track of rates and other forms of meta-analysis of market conditions. Last year, the London Stock Exchange came out with a new regulatory sandbox for companies wishing to utilize blockchain technology, and as a result, companies were permitted to issue shares themselves at a much lower cost than going public with a firm like Morgan Stanley, for example. Now, this represents a very tempting value add for finance's incumbents. Now, given that the current security token landscape is still very limited and mostly based around the Ethereum smart contract platform, this is an area where institutions could be expected to do a lot of independent development of their own, most likely building up their own systems. Now, coming back to Batoria from Fidelity Digital Asset, she highlighted settlement research as another area of interest for institutions. Right now, when you trade, the actual settlement happens 2 to 3 days after the trade is executed, she said. There are a lot of proof of concepts on, on the detachment between trading and settlement. This is like a low-hanging fruit for blockchain technology. Paxos, for instance, recently rolled out a pilot project that aims to speed up settlement for equity trades by utilizing blockchain technology. Quote, most of these have just been pilots so far. It would be interesting to see how these use cases play out over time, she continued. So what do you guys think? Kind of the takeaways from this might be that what these institutions are going to be utilizing are enterprise versions of blockchains. Again, this is something that blockchains like Algorand are very proficient in. There's the public Algorand blockchain and then develop enterprise solutions. Ethereum does the exact same thing. Of course, there are different enterprise. Obviously, Bitcoin is open source, so anybody can fork that off and form their own enterprise solution. So what do you guys think? What does the future hold for legacy financial institutions? Will they be slow or quick to adopt blockchain technology for issuing and managing securities as well as upgrading their settlement systems? Do you think they will ever build on public blockchains like Ethereum, or do you think that we will see a lot of private platforms rise and institutions will pile into building their own enterprise versions of these blockchains? And do you think the current market crisis over the pandemic is going to knock many of these institutions off track for years to come and delay their adoption or investment in this next generation technology? Please let me know here on YouTube in the comment section down below. Very excited to hear you guys' thoughts on this. This is kind of the big, stuff that I keep my eyes on moving forward, looking for investment opportunities.